now we have Renu Baid, the Vice President Research at IIFL Finance, to also talk fundamentals and some of the reasons why the market is treating the stock in that way. Renu, first of all, thank you so much for accommodating this request at a short notice. Really appreciate it. So what do you make of the valuations after this fall? Before we come to the reasons, is the valuation coming in the comfort zone or not yet?
Well, yeah, if you look at a 12-month target price that we had was almost at 3350 levels. And today, after the correction, stock is almost at those levels. So clearly, there was a very sharp re-rating for the stock. And after the event which happened on Friday, which is in line with the global parent strategy.
Right. We'll try and reconnect that line with Renu because it seems like there is a bit of a connection issue. But let's first understand why the stock is down. Let's pull up the reasons and the concerns that the street is really flagging out. With respect to this transaction which has been done, the first concern is the fact that it has been done at a lower valuation than what the consolidated entity is trading at. So the transfer of the LV business has happened at a valuation of 2,000 crore. Street was penciling in a value of around 6,000 crore to that. Secondly, this means that the minority shareholders will not be able to participate in the growth of this low voltage motor business going forward. That has been the case with Siemens earlier as well. They had hived off their healthcare business as well, and at that time as well we had seen a sharp reaction. And then there are governance issues which are also rising on account of that. We've reconnected that line with Renu. Renu, please go ahead with the point that you were talking about with respect to how the valuations stack up now.
Well, valuations today, if you see, they have already corrected partially, almost 15% in the last 2 days. But that to a good extent discounts the undervaluation for which the LV motor business has been given. So the deal is supposed to happen because it's part of the global merger or the demerger process. But what is not in the interest of the minority holders is the value at which the business is getting knocked out. So clearly, while Siemens itself would be trading at almost 45, 47 times fiscal or September 25 earnings, giving the trailing business, the outgoing business a valuation of less than 15 times EBITDA is clearly unfair. Even on a broad basis, if you compare it with CG Power or Bharat Bijlee, the other listed names in the space.
What you're essentially saying is that at current levels, it may not be a bad idea to start accumulating the stock with a 12 to 24 month kind of a horizon.
Well, yes, but investors will now have to keep in mind that discount that they were giving to Siemens versus ABB or other peers will also now get a little more widened out because of these issues of minority interests being not taken in account. So, everyone will have different opinion. We'll have to see whether this transaction goes through at the current proposed valuations of 22 billion rupees, which the company has given, or they'll have to revise it northwards. Investors who will now be looking into the stock will also have to discount this event that sooner or later, every 1 to 2 years, as in when the portfolio is aligned with the group strategy of having a software digital oriented business, there could be more businesses which can come and hence the risk of potential value distraction as and when these transactions happen with the group, especially when the businesses are less than 10% of the overall revenue mix for the company.
Overall, for the revenue mix, it might be low, but this just raises those questions and overhangs, right? But these were the questions which were raised in the con call as well that happened over the weekend. Could you talk to us about what was the management reaction to that? Did they say something about the valuation questions or the fact whether any other business will come for such hiving off, etc.?
Well, these concerns have been there with Siemens for decades, not now. As and when these transactions happen, there have always been similar concerns. You have seen VA Technologies valuations getting rejected by minority investors in India, and then the company had to up their valuations thereafter. So to that extent, management comment in the conference call was very clear that they have taken Grant Thornton's retail valuations, and another leading investment banker had given the fairness opinion. But analyst and investor views may differ because they don't give a DCF-based valuations to Siemens, the listed entity in India. Otherwise, the stock would have been far more lower than what it's there in the current price today. And hence, there's a bit of disconnect in terms of the value that investors ascribe and the way the management has ascribed the value to this business.
So, Renu, in your own assumption, I know it's a difficult call at this point of time, what are the chances that they will increase the value of the transaction?
Well, it's up to the minority holders. If they approve it, there'll be no increase. If they reject it, Siemens will have to increase the valuation if the global deal has to go through. So, in my view, there is a very fair chance that if minority holders reject it, Siemens will have to up the valuation for this business. But more than just this business, I think somewhere the valuations premium which investors were ascribing to Siemens will now have to take cognizance of such events occurring in near future or over a medium to longer term, as in when the events and the portfolio get aligned to the global digital and the automation business which the company wants the focus to be on.
Absolutely, Renu. Really appreciate you joining us today and help us decode what are the concerns, how should one look at it, and whether the stock is a good buy at current levels or not.